Across the 2010s, actually tax as a share of national income was fairly stable, around 33%. And there was changes in how we were raising that, but it wasn't really going up. That has changed since 2019. Tax revenues have gone up. They're at their highest level since kind of the end of the 1940s, and they're due to keep rising.
Hello and welcome to another election special edition of the IFS Zooms In. I'm Paul Johnson, Director of the Institute for Fiscal Studies, and it's Manifesto Week. We're recording this on Monday, so we've had the Liberal Democrat manifesto. We'll be looking at that a little later in this episode, but we'll also be talking about some other big challenges facing the parties, and in particular some of the work that my colleagues have put out over the last couple of days on the size and shape of the state, how that's changed over time, why it's changed so much, what's happened to the tax system, and how that's changed since 2010. So that's a lot to get through in the next half hour or so. To do that, I'm joined by my two colleagues, Carl Emerson and Helen Miller, both Deputy Directors here at the IFS. So let's start with, actually, I think what is arguably one of the most important issues facing us, and something that I think we need to understand why all of the parties are struggling a bit to get their message across. And that's what's happened to the size of the state over the last 15 years or so. And what I mean by the size of the state, I mean the amount of money as a fraction of national income that the government is spending on our behalf. And what's happened to that is that it has grown. It grew dramatically, obviously, through the financial crisis. That feels like a long time ago. Then austerity, the 2010s, was all about driving that down. But then, of course, after COVID, it's gone back up again. And Carl, just to give us a sense of that, what did happen through the 2010s? Did we get the size of the state back down to historically low levels? And what's happened since 2019? To what extent, post-COVID, do we have a bigger state, in other words, bigger public spending, than we had before?
I think the two periods look very, very different. The 2010s was a period where there was very big cuts to some areas of public spending. So big cuts to spending on working age benefits and tax credits, big cuts to public services outside of the NHS, and a few other notable exceptions. And those big cuts in spending over that decade took the size of the state, took public spending as a share of GDP down, but only back down to what it was at in 2007-8. So it took the whole of that decade to reverse the big increase in public spending as a share of GDP that occurred in the immediate aftermath of the financial crisis. And although that decade of austerity was obviously very painful and did involve big cuts for many public services, it meant in 2019-20, public spending as a share of national income was the same as what it was in 2007-8, after a decade of new Labour governments.
I think, just to interrupt you very quickly, I think that will surprise a lot of people. A decade of austerity, and all of the Conservatives managed to do, as it were, was to get the state back to the size it was after a decade of Labour government up to 2008. And that was a decade of pretty big spending increases. And that's a really important baseline. All of that austerity, and we just got back, as it were, to where we started.
Then, of course, the pandemic hits, big increase in public spending, some of that kind of obviously temporary, the furlough scheme being perhaps the most obvious example of that. More recently, the cost of living crisis associated with temporary spending on supporting, in particular, businesses and households with their energy bills. So a big increase in temporary spending. But if you look out at the government's forecasts for 28-29, those forecasts imply pretty tight spending plans going forwards, but still spending in 28-29 well above the level we had either in 2019-20, just before the pandemic, or the level we had in 2007-8. So it looks like a big part of the increase in spending we've seen over this Parliament is going to prove to be permanent. And that increase has been pretty sizable. Compared to previous Conservative governments, we've seen an increase in spending as a share of GDP, which is really quite uncommon under Conservative-led governments. And the increases look like they're going to be in terms of debt interest spending. In 2028-29, that's forecast to be about 1.5% of GDP. That's £41 billion higher than what it was in 2019. So we've got this big pile of government debt, and it's now much more expensive to finance. So the increase in public spending on debt interest bigger than the total amount we spend on many areas of public spending. So that's a big part of the challenge, and that's changing the size of the state. The other is a big increase in spending on working age benefits. In particular, we've seen big increases in the number of people receiving health-related benefits, and that's driving up the bill for disability benefits and for universal credit. It looks like we'll be spending about 1.2% of national income, or £33 billion a year, more on that.
So more on debt interest, more on welfare spending, more on the health service. There's always more being spent on the NHS. And that is, I think, what begins to explain this extraordinary position we appear to be in. As I said at the beginning, we are spending more, and that looks to be, as you were saying, permanent than we've ever spent before, at least for a consistent period of time. And yet we don't seem to have money for local government, social care, the justice system, prisons, all of those things that we know are really, really struggling. So lots and lots of money being spent relative to history, and yet public services continuing to struggle.
And of course, the other thing we don't have, which is what previous governments have kind of enjoyed, is a big dividend from a more peaceful global environment, where we've seen the defence budget cut again since the end of the Second World War, which has meant that we can spend more on the NHS essentially without increasing the overall size of the state. That was always going to come to an end at some point. You can't keep cutting defence spending as a share of GDP. It's pretty clear that we're not going to cut it any further anytime soon. And indeed, it could well be that over the next few years, we see defence spending rising. And if we're increasing defence spending and increasing health spending, well, that would be the first time in modern history the UK has done that.
That's, again, a really important point for people to understand. It really was the case that for decades, cutting defence spending was, to at least some extent, what allowed us to expand the size of the welfare state without the size of the state, or indeed the tax burden, increasing over that period. And you can think of the last 70 years as a period of sharp cuts in defence spending, more spending on health and other parts of the welfare state. We really reined the size of the state in for a long period. And even if you look at the 2010s, we took money out of public spending, whereas a lot of our European neighbours did more on the tax side than we did in terms of getting over that hump of the big deficits that followed the financial crisis. So our governments have tried really hard to keep the size of the state down, but it feels like the 2020s are the decade in which that balloon has burst, in a sense, that the size of the state has come out, as is growing to some extent, as it has in previous decades in other countries. We've mentioned sort of the other side of the coin here, which of course is we're spending more, we need to tax more. And that's why we've got Helen here to talk about how we are taxing more. We'll talk a bit about the tax system and how that's changed in a moment. But Helen, just give us the sort of the headlines about the other side of the coin that Carl's been talking about. We're spending more. It is also the case, is it not, that we are taxing more than we have done in many, many decades?
Yep. So across the 2010s, actually tax as a share of national income was fairly stable, around 33%. And it was changed in how we were raising that, but it wasn't really going up. That has changed since 2019. Tax revenues have gone up. They're at their highest level since kind of the end of the 1940s, and they're due to keep rising. So along with this increase of the state that Carl was talking about, a really pretty big increase in the overall tax take.
Remarkably, that hasn't come at the cost or at the detriment of people on average kinds of earnings. So our tax take, the highest level it's been for 70 years, but the tax take in direct taxes from the average earner, lower than it's been in 50.
We've seen the big increase in revenue coming largely from income tax. But what's surprising is that within that, actually, income tax is still lower for low and median earners. They're benefiting from a personal allowance that is still higher than in the 2010, and from the recent national insurance cuts. Where income's coming from, to a greater extent, is the top of the income distribution. So they are facing both higher rates, and more people are now paying higher rates than has been the case historically. So we've seen an ongoing trend that's been happening for decades, actually, where we're getting more and more income tax right at the top of the distribution, the sort of top 10% and so, where most people are seeing cuts. So, as you said, really remarkable. Most people seeing cuts in their direct personal taxes, despite the fact that those revenues have gone up a lot.
And partly what's happening towards the top of the distribution, we've got many more people paying higher rates of tax, the 40p rate, with the point at which you start to pay that now at £50,000, which I think is nearly £20,000 below where it was in real terms in 2010. And then many more people also being sucked into the top rate. There's a 60% rate between 100 and 125,000, and then a 45% rate over that. One of the things that really struck me in what you published today, Helen, was that there's now almost as many people facing those top rates of tax today as there were facing the 40% rate back in 2010.
Exactly, yeah, really big actually reshaping in kind of income taxes. So yeah, it used to be the case that the 40% rate was the kind of preserve of just the very top, and now actually that's much more widespread across people, and those higher rates kind of for people above £100,000 are now stretching much further than they used to.
The other thing that really struck me from your analysis, which I find just astonishing, is the extraordinary amount we're getting from corporation tax. Again, I think possibly the highest amount we've ever had as a fraction of national income, or as a fraction of the total tax take. So I've always thought of, you've got income tax, you've got national insurance, you've got VAT. Between them, they're nearly 2/3 of the total, and everything else is a long way below. We're now in a position, I think, where corporation tax, I think this year, will break the 100 billion mark for the first time and raise about 10% of everything we get from taxes, way more than we used to. How on earth what's going on there?
So, like you said, it is still true that the top three taxes are our big three taxes. We still raise about 2/3 of revenue from income tax, NICs and VAT, so that hasn't changed. But we are raising a lot more from corporation tax. Actually, if you just look very recently, that's partly because we had a big increase in the corporation tax rate. Although worth reminding people that the corporation tax rate is actually still below its level in 2010. So it was 28% back in 2010 and it's 25% now. I think one of the underlying things that's happened that I think has been fortunate for the government is that corporate profits have been growing relatively strongly, and that has therefore helped to drive up corporate tax revenues. We've also had an additional sort of windfall levy on oil and gas profits, and the oil and gas profits were high recently, so that's also helped for a while at least push those revenues up.
One reason it's surprising is that certainly 30 years ago, maybe even longer ago than that, people were thinking, well, we might just lose corporate tax revenues altogether because of international tax competition and how effective a lot of corporates were at avoiding this. It seems like that just hasn't happened.
Yeah, I think lots of people, including people in this building, have predicted the demise of corporation tax for many decades. Of course, there was always lots of things going on, and it was always going to depend on the competitive nature of different governments. There have been some moves recently, spearheaded by the OECD, to try to crack down on certain kinds of avoidance of big multinationals, and that might have helped a bit. But yeah, we haven't seen this big decline in revenues. What I don't think we should conclude from that, therefore, is that we should keep putting up corporation tax rates and just keep using that as the cash cow. I mean, there are serious problems with our corporation tax in the way it's designed that we need to fix, and they will be worse at higher rates. And I think we should still keep an eye on competitiveness. Our corporate tax rate actually is still low relative to other large economies. So at the moment, on competitiveness, that's okay. If we started ratcheting it up further, we would start to look a little bit less generous. So I think we've done well so far. We shouldn't conclude that we can just keep getting more and more corporate tax revenue, and that's going to ride to the rescue for the kind of problems we've talked about before.
Well, I think there's obviously lots of other things that have happened to the tax system over the last 14 years, but we're not going to go through all of those in horrible detail. I mean, one thing that is very striking again in what you put out, Helen, was just this long list of new taxes that we've had. I mean, there was a period when Conservative chancellors were proud of the taxes they abolished, but our recent set of Conservative chancellors have introduced tax after tax. Can you just list a few for us? Because I can never remember them. There are so many of them.
Oh, yes, there's bank levy, bank surcharge, plastic bag taxes, plastic packaging taxes, apprenticeship levy. What else is on there? Some environmental tax-like measures and a bunch of others. We can post the list. So yeah, I think it does stand out that there was lots more taxes. In fact, what also stood out to me, we wrote this piece reflecting on what had happened. And obviously, I know what happened. I watched it in live time. But getting to the end of that, looking back and seeing things like, just look at this long list of and not just new taxes, but also all the new fiddly rates and reliefs introduced into current taxes. And despite that, when I had to write the list of what are the big tax challenges, I basically go back to 2010 and copy and paste the list I had then and put it into the new document, which is really depressing because it means that we had a huge amount of policy change, lots of new taxes, lots of new reliefs and rates. And actually, we're still at the position where every tax has a big problem, and the big problem it has is the same as it had in 2010. So, some small wins, some things that got worse, but overall nothing moved the dial. I think that's what really stood out to me in kind of reflecting on the last 14 years.
Well, no sense of strategy. I mean, that's been obvious in everything the government's done as it's increased personal allowances, then cut corporation taxes, and then increased them, fiddled around and around and around with the way they tax pensions. And now they're proposing a set of changes in their announcements they've made, which just undo some of the things they've done over the last few years. So no sense of real direction there.
And perhaps worth saying just very quickly on that, I mean, some things I think mark you can see there's a different strategy, if you can call it strategy and be generous, sort of before 2019 and after 2019. Like Sunak and Hunt have had a different plan, and some of that is just, people changed. But actually, even within governments, there's been lots of big swings in policy direction. So it's not just that, Sunak and Hunt were different. It was that even within parliaments, we had big changes in policy direction. So no clear strategy of what are we aiming to do here. Lots of back and forwarding.
Well, let's spend the last few minutes then talking about the Liberal Democrat manifesto, and let's start with the tax side, and then I'll go back to Carl to talk about some of the things they've suggested they want to spend the extra tax on. They've got a long list, haven't they, of ways from which they claim they can raise an extra something like £28 billion a year from taxes. And the most remarkable thing looking at that list is you think, well, it's fine. I won't have to pay any of those. These are all taxes on big corporations and banks and people who fly lots and lots of times a year and all of these sorts of things. I mean, just sort of stepping back and thinking about it from the perspective that you've just been discussing, what's happened over the last 14 years. I mean, does this look like a good set of reforms to the tax system as a way of raising money, or does this look a little bit just a way of pretending they can raise lots of money without actually affecting anybody?
So I think you're completely right that it's going to look victimless. So people will see this and no one's going to think, oh my God, my tax is going up, because they're not going to see their increase. So in that sense, you can see it's politically appealing. I think there are some things worth saying they're good. So that we don't know full details about what their capital gains plans would be, but they look like they're moving in the right direction. But I think most of this list are either, small and, not particularly exciting, and certainly not making the tax system dramatically better, or actually just not very good ideas. I think the one that deserves special mention because it's particularly bad is the idea of introducing a tax on share buybacks. Without going into the nitty-gritty detail, basically firms decide how to finance themselves, whether they want to use loans from banks, for example, or get equity from shareholders. This is just a tax that would discourage people from using equity from shareholders for no good reason. And in fact, we already have a big advantage for debt financing and a discouragement of equity financing. This is just pushing further in this direction. I can see absolutely no reason to do this. So whether it raises money or not, I think it's a bad idea. And in fact, it might not even raise the money they want to raise, because what firms might do is just decide, well, okay, you're taxing this activity, I'll just stop buying back shares. I'll, for example, pay dividends instead. So it's both a measure that probably won't raise the revenue they want and would be economically damaging. So I think that one deserves special mention. But there are a few others here I think that economically you wouldn't want to introduce.
What about taxing the banks? They seem to think they can get loads and loads of money from levying more taxes on banks. Is that realistic?
Well, in order to raise the revenue that they want, and I think you probably could, but in order to raise them, you'd have to put bank taxes up to very high levels, and higher than anything we've seen, certainly since the financial crisis, much higher than anything the Conservatives put on banks. So could you do it? I mean, yes, probably you could pull it off with these very high tax rates, but there is a risk there that banks change their behaviour. And of course, what might end up happening is that those costs get passed on to us, to consumers, to people who use banks. It won't necessarily just come from the big profits that banks have. It might come actually through higher costs to people using banks. So again, not a victimless tax. I mean, all taxes are paid by people, and that one might be paid by people who use banks, which is all of us.
And of course, a risk that they might move their headquarters offshore or find some other way of paying tax somewhere else.
Possibly. I mean, it depends. There's a bit of difference between, they've got two different taxes, and it might be different how you could respond to, but can you move? You can't move your customers offshore. But yeah, firms, the higher you put taxes up on these kinds of firms, the more you have to worry about how they're going to respond to them.
And the last big proposal that the Liberal Democrats share with the other two parties is they all seem to think they can get another 6, 7, 8 billion from cracking down on avoidance and evasion. How realistic is that?
I think it's realistic that you can get more money from cracking down on avoidance and evasion. I think the big uncertainty in all of the parties' plans is the net return you can get. So I reckon if you put more money into HMRC, you'll get a positive return on that. So you put £1 in, you get more than £1 back. What I don't know is if you'll get a net 4 billion, 5 billion, 6 billion, 7 billion, or whatever the latest number in the bidding war is going to be. So I think, 7 billion is starting to look a bit racy, I think, as a net figure. I think more importantly, if you're going to have, that kind of money penciled in your scorecard, you have to get a plan for what happens when it's harder to get that money in, it doesn't come in as quickly, or actually you just can't get it in. Obviously, they're penciling this in for, spending pledges that they know would cost money. I think looking at this whole package of measures, I think they're going to struggle to get the 27 billion they're getting, and there's at least some uncertainty around, some of the measures. So, yeah, I think it's looking difficult to think how you'd use this to make permanent increases in the state. I think you need to come back and do more.
So, Carl, let's pick that up. I mean, they might not get their full 27 billion, but the Lib Dems certainly have some policies where they want to increase taxes. Assuming they were to get something like that, I mean, does that not solve the problem we've been talking about a lot, which is that the other parties haven't really been looking at how they would avoid cuts across public services? Are the Lib Dems essentially saying, well, we'll get this money and we will use it to make sure that we're not cutting local government and the police and the justice system and all those kinds of things?
Well, I think a £27 billion increase in tax could have been enough to largely make the problems of essentially the cuts that we worry about in the next Parliament not having to need to be made. So, and the Lib Dems indeed are planning to spend £27 billion more on day-to-day things. So all of that extra tax revenue is to be spent. But it doesn't help. And the reason it doesn't help is because they want to spend it on other things. So if you look at their list of stuff they want to do, quite a lot of it is to go on things like health, social care. They want to increase the generosity of the benefit system. In particular, they want to end the 2-child limit on means-tested benefits. They want to increase carers allowance. So you see these specific spending pledges, many of which are in the kind of areas that have been protected. I should add defence and overseas aid also to that list. So what it doesn't do is reduce really the need that you'd have to do to cut areas like prisons, justice, or local government services to make the numbers work.
So that's one of the problems, again, I think, about this election campaign is that each party wants to attach any additional money that they say they're going to raise to some goodies, and you can understand that. And those goodies, as you say, might be, in this case, a more generous particular elements of the welfare system, more money for bits of the health service, or what have you. But none of them seem to want to associate it with, well, let's just dig us out of the hole that we've got into in terms of our local authorities going bust or our prisons being overfull.
Yeah, the vast majority of what the Lib Dems have earmarked here looks like it's going to either public services that were already kind of in the protected camp, if you like. That's not to say that those increases in spending won't be welcome or deliver some benefits, but they don't help the unprotected ones, or it's increases in social security benefits, which again will have some value. For example, ending the 2-child limit is a pretty well targeted thing to do if you want to reduce child poverty, but it's not going to help the problems you face in terms of your local government services, your prisons or your courts.
I mean, it's interesting, isn't it, the social security spending that they're proposing, outflanking Labour, who don't seem willing to, for example, say they would get rid of the 2-child limit. And as you say, I mean, that is it 3 billion or so, which would be pretty well spent if what you actually were focused on was reducing child poverty.
Yes, what it does is it says that if you will get extra means-tested support for having 1 child or for having 2 children, but if you're in a low-income family, you will not get additional means-tested support for children more than 2. So if you've got 3, 4, 5 children and you lose your job and you end up on low-income benefits, you'll find that your benefits are restricted. So that means having a low income and having that number of children in your household is very likely to put you into poverty, at least on the standard way that we measure it. So it's getting rid of that would be a pretty well targeted way of reducing child poverty. I think in general it's notable that the £27 billion increase in tax to pay for a £27 billion top up to the spending plans does look bigger than what we're expecting to see in Labour's manifesto later this week.
And we will wait and see what that is. I mean, in one sense, it looks rather as though the Lib Dems are outflanking Labour to the left in terms of their tax and spending policies. No doubt, well, this will increase the pressure on the Labour leadership to find more money for various parts of the welfare state, and in particular, I suspect for that to get rid of that two-child limit. But we will wait and see what the Labour Party proposes. We have zoomed around quite a lot of issues in this edition. Hopefully you've taken away from this that the size of the state as we are today in terms of spending is considerably bigger than it was pre-COVID, and indeed bigger than it was in 2007 after 10 years of the last Labour government, that a lot of that is to do with increased spending on health, welfare, and in particular debt interest, alongside dreadful economic growth, that the state is not going to shrink very much under current plans, despite the fact that we don't seem to have enough to spend on our public services. Tax is at its highest level for a very long time, but not in a way, interestingly enough, that hits people on average kinds of earnings. But we've had an absolute shambles in terms of trying to have anything approaching a tax strategy for the last 14 years. The government really doesn't seem to know what it's been trying to do with the tax system, and we really do hope that the next government does something rather better with it. And then finally, we've had the first of the significant manifestos today, the Liberal Democrat manifesto, which appears to be saying they would raise lots of additional tax revenue, but rather, as we've seen for far too long, pretending that that won't actually hit anybody, even if it's going to be raising, they hope, £27 billion, because it's the banks and it's the big tech companies and rich people and so on. We doubt, frankly, whether they could get that kind of scale of money from those changes, and we certainly doubt whether some of those changes are economically sensible. But they're spending that money in their manifesto not on filling some of the holes that we've identified in the public spending plans, but in offering new and sometimes very welcome, but nevertheless new spending commitments, which would leave them, even with that tax rise and spending rise, struggling to fund some of our public services. And therein lies the problems that are going to face the next government, whoever forms it. So thank you ever so much to Helen. Thank you ever so much to Carl. I know you've taken time out of what is proving to be an absurdly busy period here for all of us here at the IFS as we continue to look at all of the huge number of policy proposals, small and not so small, that are coming out of the various parties. So do continue to keep listening to us here on the election special editions of the IFS Zooms In. You can see the rest of our work on www.ifs.org.uk. And of course, please do consider supporting us by becoming a member for as little as £10 a month. That really does help us do all of the work that we're doing, even if it doesn't help us get any sleep. You can find out more in the episode description. See you next time.